if you could stretch your charitable giving further without increasing your budget? Well, that's the power of state tax credits. This is a great way to multiply the impact of your charitable giving, and in this video, I'm going to show you how it works. When you donate money to charity, in most cases, the tax benefit is a charitable deduction. Now that means that it lowers the amount of your taxable income for the year. But here's the thing, charitable donations are an itemized deduction, which means you only get credit for them if your total itemized deductions are more than the standard deduction. If that sounds like a lot of tax jargon, don't worry about it because you probably aren't itemizing. In fact, only about 10% of US taxpayers itemize, which means that most people don't get any tax benefits for their charitable donations. Tax credits are different though. Tax credits can directly reduce your tax bill, whether you itemize or not. Let me give you an example which will make this more clear. We have Jim and Pam who have $100,000 of taxable income. We're going to make this simple and say that they pay 20% in federal taxes and 5% in state taxes. So 20% of their taxable income is $20,000. Now that's their federal tax bill. And then 5% of $100,000 is $5,000, so that's their state tax bill. Let's say they give $5,000 to charity this year, and we'll be optimistic and say that they itemize and get a full deduction for their gift. A deduction means it reduces their taxable income, so instead of $100,000, after their $5,000 deduction, their taxable income is $95,000. We'll apply their 20% federal tax rate and 5% state tax rate to their lower taxable income of $95,000. And now their federal tax bill is $19,000 and their state tax bill is $4,750. So they lowered their total tax bill by $1,250 with their $5,000 gift, which is great. Now we can simplify that and say that the tax benefit of deductions is Jim and Pam's combined federal and state tax rate of 25% multiplied by their gift of $5,000. $5,000 times 25% is again $1,250. But let's say that Jim and Pam are actually savvy donors, and so they give their same $5,000 gift to an organization that's eligible for a state tax credit instead of just taking a deduction. So now we're talking about tax credits, not tax deductions. Tax credits directly offset their bottom line tax due. Now the amount of these credits vary, but in Missouri, where I'm located, there are organizations eligible for 50% and even 70% state tax credits. So we'll say Jim and Pam donate to an organization eligible for a 70% state tax credit. We can take their $5,000 gift times 70% to get to their state tax credit of $3,500. This credit is applied directly to the state tax they owe. So if we go back to their numbers, instead of owing $5,000 in state taxes, they apply their $3,500 credit and only owe $1,500 in state taxes. And that's not all. Jim and Pam can actually take the portion of their gift they didn't receive a credit for and deduct it from their income, lowering their taxes even further. So their $5,000 gift minus their $3,500 credit equals $1,500, which is the amount that they could still deduct from their taxable income. And going back to our formula for the tax benefit of tax deductions, we can take the $1,500 deduction times their combined tax rate of 25% to get an additional tax benefit of $375. So by utilizing the state tax credit, they increased the tax benefit of their gift from $1,250 when the whole gift was just a tax deduction to $3,875 when utilizing the state tax credit and deduction. That's huge. They got triple the tax benefit for the same $5,000 gift. Another way to view this is that their $5,000 gift actually only cost them $1,125 at the end of the day. The other $3,875 came back to them in the form of lower taxes. Now the reason Jim and Pam give is not for the tax benefits, of course, but doing their giving tax efficiently can stretch their giving budget further. Because if they had budgeted $5,000 for giving, then after their tax benefits, they still have a lot of room left in their $5,000 budget to give. And that's what I mean when I say that tax efficient giving can stretch the same dollars you're already giving further. The real story is the lives that are changed because of your generosity. And by utilizing tax credits, you can multiply your impact without multiplying your costs. Now, this is just one way to make the most of your charitable giving. I've put together a free guide that walks through 5 of the most effective strategies to maximize your charitable giving and minimize your taxes. You'll find the link for that in the description. And if you found this video helpful, give it a thumbs up and subscribe to this channel for more strategies helping you make smarter money decisions.